Hello, everybody. This podcast is focused on long-term interest rates and long-term bond investments, 10 years and above. In our last podcast, we talked about floating rate bonds indexed on a short-term variable index. As a reminder, these instruments will readjust their coupon upwards as short-term interest rates increase. They could be viewed as an investment which could benefit from the monetary response to the current inflationary environment. As for long-term interest rates, these account for the general forward-looking dynamics of an economy. Is the economic activity accelerating or slowing down? Are inflationary expectations increasing or decreasing? Long-term interest rates reflect the sum of future expected economic outcomes. If floating rate instruments increase in terms of yield as short-term rates rise, the value in long-term bonds will be in their capital gain potential if long-term interest rates were to decrease. These two opposing dynamics of rising short-term rates alongside decreasing long-term rates at the same time are currently reflected by the inverted interest rate curve we have in the US today. Fixed income markets seem to be sending the following signal. The expectation is for interest rates to rise over the next 12 months, but to come down significantly sometime after this period. If one takes a big picture perspective, investors could look to floating rate instruments as a hedge against an inflationary environment, today's world. Long-term bonds could be considered as the consequence of a restrictive monetary policy leading to a slowing, stagnant economic environment, a tomorrow's world scenario. In the coming months, all eyes will be on the data to see if these statistics confirm or not what fixed income markets are currently anticipating, i.e., a weakening economic and inflationary environment for 2023-2024. This podcast is for information only. It should not be considered as investment advice. We would recommend seeking professional investment advice positioning on the fixed income investment curve and choosing floating rate or long-term investment bonds instruments. Thank you for listening.